What's up, everyone? This is Silver Slayer, and welcome to your daily silver stacking video. Thank you for tuning in. Ladies and gentlemen, we are less than 100 subscribers away from hitting 53K. Are you going to be in the under 53K club? I mean, it's up to you. And by the way, my last video, I interviewed a very smart silver stacker, one of my favorite YouTubers, Investing with TJ. I did a huge interview. It's the video's an hour long, by the way, but I did put timestamps because I asked him so many different questions about silver price manipulation, to the forecast, to the fundamentals. I mean, he's a chartered financial analyst, very smart. He's the numbers guy. I highly recommend you go check out that interview. It was a great video. We have a lot of good conversations, but just the amount of content, of rich topics that we covered is unbelievable. One of the best interviews, in my opinion, in the silver stacking world. I mean, this guy knows what he's talking about, and his channel is amazing as well. He's about to hit 10K subscribers. So yeah, go check out that video. Go subscribe, and I promise you won't be disappointed. Very good interview. So yeah, I just wanted to get that out of the way. Now, this video is interesting because I found two different articles that are very bullish on silver, but the angles they come from talking about this is very interesting, that you'll see in a second. This first article is titled, Here's Why You Should Bet on a Turnaround in Silver. And the second one is talking about how inflation is just getting started, but do you have gold and silver? So you could see there's going to be a lot of content in this video as well. I'm really excited to cover this, and like always, make sure you like the video, leave a comment. Even if you just say, hey, what's up, Slayer, it helps the video get recommended and do well. So with that said, let's jump into it. So they are going to be talking a lot about stocks in this, but just swipe out that word. Just swipe out that word, because this still is talking about silver's price, regardless if they're coming at it from the digital side. So it has been a turbulent start to the year for major market averages, with the NASDAQ down 3%, stocks getting pummeled, evidenced by the Renaissance IPO, and despite the carnage, though, precious metals have been giving up grudgingly, with silver down 2%. And that's despite recent rate hike chatter. And that's interesting, because usually that would be bullish for precious metals. This strength in the face of a more hawkish stance from the Federal Reserve can be attributed to the fact that the initial rate hike is typically a buy the news event for precious metals. And that's so true. That's the speculative aspect of silver's price nowadays, especially silver, because it's a much smaller market than gold. So silver is going to be more volatile. And the fact that silver has sold off sharply on the rumor already, down 20% from its highs, let's take a closer look at the metals and some of the best ways to gain exposure. So the chart above shows that real rates continue to sit deep in negative territory, following the most recent inflation readings, which is typically a very bullish backdrop for precious metals. And this is because there is no opportunity there's no opportunity cost to hold the metals. In fact, holding the metals provides protection against losing one's purchasing power. However, with Bitcoin and other digital assets being in vogue, neither gold nor silver responded with how they should have, causing many to abandon the trade altogether. And that's kind of what TJ was talking about in the interview. He actually brought up a very interesting point. And he's talking about how gold and Bitcoin move together, but silver's almost detached. When Bitcoin's going up, silver doesn't always follow suit like gold does. And the way he explains it is just it's incredible. I highly recommend you go check out that interview. But when we are seeing new things come into play, come into light, like crypto, which is also basically a rival against the dollar, this might affect the price of precious metals more, because usually precious metals is the safe haven. When people want to run away from the dollar, their only option basically was precious metals. But now we do have cryptocurrency, and what is the pull that's going to have on precious metals as well? Now, true silver stackers know where to put their money. If you can't hold it, you don't own it. But I do see Bitcoin, even though it is in the same category, that might be the reason that it's almost a double-edged sword. So while abandoning an underperforming trade makes some sense given that it's temporary opportunity cost, the flight out of gold and silver by many speculators has contributed to a massive decline in most gold silver miners with valuations which is the most attractive they've been in years. So might be time to re-enter the trade for those who rushed out of the trade. And yes, I mean, if you panic sold or if you switched out of precious metals and did put your money into crypto, Bitcoin, whatever, which I'm sure some people have, especially if they see Bitcoin doing better and gold and silver not. I mean, it makes sense from an investor, perspective. If you're about the numbers, if you're about making profit, then that would make sense. But that's mainly because you don't understand silver's true value. A true silver stacker would see silver, going downwards and take advantage, lowering your dollar per ounce average. And why, if you're not selling soon, would you buy something that's going up in price compared to something that's going lower? That means that it's a better deal. Would you rather buy something that's in overbought territory or undervalued territory? It would only make sense to buy something that's cheaper. So a portion of the commentary below is from the latest issue of the Mining Stock Journal. And by the way, to make more sense of the last statement I just said, let's say you go to the store and you see shoes. The shoes are $50, but you didn't buy them. Let's say next week you go to the store and the shoes are $60 and you bought them. Would that make sense if you buy them when the price went up? Or let's say you go to the store next week and the shoes are $40, but you don't buy it. You see what I'm saying? Bitcoin and precious metals were at a certain point. Bitcoin goes up, so people buy. But when silver goes down, people don't buy. Wouldn't it make sense to buy the $40 shoes that are $10 cheaper than the $60 shoes that went up $10? See, people need validation and confirmation that their investment can go up. But that doesn't mean that you should buy then. That actually means you just don't trust silver's true price, because it will only make sense to buy silver cheaper, lowering your dollar per ounce average because you know the price will go back up. So the nature of inflation is widely misunderstood and misinterpreted. And inflation and currency devaluation are tautological. They are two phrases that mean the same thing. When the money supply increases at a rate that is greater than the wealth output of an economic system, it reduces the value of each marginal dollar created. For pedants, I'm not going to delve into the difference between bank reserve creation and money supply. These are inextricably linked. And the dollar devaluation has been occurring since the early 1970s. And I wonder why. 1971 is when we got rid of the gold standard. So, of course, as soon as we get rid of the gold standard, the dollar is devaluated. I mean, the dollar collapses. The value of the dollar is relative to gold, which is real money, which has declined 98%. See, when I tell you guys the dollar's lost 98% of its purchasing power, that's a literal number. Not 97%, not 99%, 98%. And that is, as soon as we got rid of the gold standard, as soon as our money wasn't backed by anything, the dollar collapses. And it was in 44% in the last 20 years. So in 1971, $40,000 would buy a 4,000 acre square foot home in good suburb. Now it takes $700,000 on average to buy the same home. See, what you can buy with the dollar is decreasing. So in 20 years, what is $10,000 today is going to be $50,000, $60,000. So if you hold your money in a bank account, your money is basically burning away, because even if you put $50,000 in, and in 20 years, that won't really be 50,000. Yes, it will say 50,000, but what you can buy with it will be nowhere near. So the CPI report is a little more than a tool for political propaganda. In addition, the Fed has made the public's ability to measure the money supply considerably more difficult over the past 15 years. See, in 2008, Bernanke Fed stopped reporting M3, which most accurate measured the money supply, right? You can't see the M3 past March 2006. Why? In early 2021, the Fed changed the definitions from M1 and M2. But why? The Fed has done this to disguise the true money or amount of money that has been created over time. M2 money supply has increased at an annualized rate of 20% since February 2020. And it's interesting to say February 2020 because you know what happened then. The M2 measurement is now 90% of the GDP, and that's versus 44% at the beginning of 2000. So going into 2022, gold is considerably mispriced relative to the amount of currency that has been printed. At silver, with the gold to silver ratio of 79, is extraordinarily mispriced versus gold. So now that the Fed seems intent on tightening its monetary policy with the FOMC meeting minutes released last week, what happens to the price of gold when the Fed begins a rate hike cycle? I mentioned in the past, and this is Adam Hamilton, who publishes his Zeal Intelligence newsletter, did a statistical study which concluded that some of gold's best rate of return periods going back to 1971 have occurred when the Fed goes into a rate hike cycle. The chart I prepared shows this. So let's take a look. 1971, we get rid of gold and silver. The dollar's backed by nothing. Here's the Fed funds, and this is gold's price. Now let's look at this. It looks pretty similar, but you can see right here it's going down while gold is going up. That's not normal. And then you can see right here it dramatically goes down when gold goes up, and you can see that same thing right here. Gold's going up. The Fed funds go down. So commentary to the mainstream narrative, seated in ignorance, and let's actually take a look at the time frames. So 1980, this is when silver was $50. 2011, this is when silver was $50. You could see these price hikes. This is when gold broke past 2000. You can see the all-time highest gold price, and this is when essentially nothing, right? Zero. So you can see the time frame of how precious metals performed during this. In commentary to the mainstream narrative, seated in ignorance, I might add that gold moves inversely with interest rates. In the modern fiat monetary system, gold rises when Fed hikes the Fed funds rate. And I'm sure you can find Hamilton's piece using Google to get numerical specifics. So the rationale behind this is that in every instance, when the Fed finally acknowledges that price inflation is a problem that needs to be addressed with tighter monetary policy, flight to safety money moves into gold because the market has determined that the Fed is way behind the inflation curve, and the start of a rate hike cycle is the signal to the market that inflation is going to get worse. Furthermore, the Fed will not act quickly enough to get ahead of the problem. Since the 1990s, and by the way, they do that. They don't want the problem to be fixed. Since the 1990s, the Fed tends to start an interest rate hike cycle at the time when the economy is already rolling over. Gold's price rise along with the Fed funds rate is expectation that the Fed will have to cut its rate hike cycle well short of the plan in an effort to re-stimulate the economy, right? You can see that in the chart above, in which each rate hike cycle since the mid-1980s gets shorter. This then is abandoned and reversed at a lower Fed funds rate, like I was just showing and talking about. So to the extent that there's weakness in the precious metal sector connected to the Fed's shifting policy stance and the resultant bloodbath in the stock market, I expect the weakness to be short-lived and the dynamic reflected in the chart above will kick in. I also think that a severe economic recession will force the Fed to abandon its tightening stance by mid-2022 and resume its money printing and near ZIRP monetary policies. This will serve as a rocket fuel for precious metal sector. And yes, exactly. They expect three cuts in, or three hikes in 2022, but the word expect is very important to pay attention to. And do you really think that, and there's a reason why they never get ahead of the problem, is because they don't, they're not intended to. They're in the public's eye, they want people to think they're trying to fix the problem, but behind the doors, they aren't. They know what's happening. They knew as soon as we got rid of the gold standard in 1971, they knew what was going to happen. They knew this. If the dollar isn't backed by anything, how is the dollar going to survive? Every fiat-based system throughout history has collapsed, and it's designed to. You're trying to replace debt with more debt. It's like trying to pay off a credit card with another credit card. It is designed to fail. Why do you think gold and silver is a direct threat to the US dollar? Because gold and silver is real money. Why do you think the government deems gold and silver as the rebellious metal? Because it's a direct threat. Because they want, when your money is pegged into stocks or wherever, you're a slave to the system. When you're in debt, you're a slave to the system. It's a power move. When you take control of your money, meaning putting it in precious metals or even Bitcoin, you've taken the power away from them and put it in your own hands. So of course, they don't want you investing into precious metals. Of course, they're going to pump money into stocks and try to keep, you know, S&P 500 up, you know, compared to gold and silver. Of course, it makes sense. But that also makes sense why we do not need to be doing this, and why and how important it is to invest in the precious metals. If you can't hold it, you don't own it, though. I'm not talking about the digital space like this first article here. I'm talking about physical gold and silver, especially when you're looking at the COMEX. You know, if there's let's say you know 900 what was the annual demand this year? I think it was like 1.2 billion, or of the demand was, but the production was 900 million. Regardless, let's say the COMEX, let's say everyone wanted to turn that contract in for physical delivery. There wouldn't be enough. And actually, every ounce of silver you own in your safe, 100 other people theoretically own that, but it's digital. The only person that actually owns that ounce is the person that's holding it in their safe. Those other 100 people that think they have that ounce, or showing that they do with a digit on the screen, doesn't really have it. And if they tried to turn that contract in, you know, or if everyone did, then it would get exposed, right? The Hunt brothers did that in 1980. They owned 77% of the global silver supply, and they tried to turn all of their contracts into physical delivery. Well, obviously that couldn't happen, so the government banned silver on the spot, made a law on the spot banning silver, crashed the price, and then deemed the Hunt brothers as these evil guys, even though they were just investing. And they chose silver, by the way, because in 1980 you couldn't invest in the gold, right? Which is interesting to look at how gold has been banned several times. Even just 40 years ago, you couldn't buy gold, which is just crazy to think about. But if you don't know it, then you would expect the differ. You know, you wouldn't realize, and not even 20 years, you know, not even a decade ago, silver was $50. But if you don't know the history, it makes you really look at these things narrow-minded and become more emotionally attached. But when you look at the bigger picture and step outwards, this stuff happens all the time. Gold has been confiscated several different times throughout history across the world, right? And silver could easily be confiscated when you're looking at the shortage, and looking at the massive amount of silver we're going to need for solar panels, 5G towers, electric vehicles. Even though there's not enough silver for that to happen, they're going to find the silver some way, even if they have to confiscate it from us and pay us spot price. So anyways, yeah, I mean, there's a lot to look at. I like these two articles. I definitely like the second article more. Really goes into detail, and really shows and exposes a lot of what, you know, we're talking about. But they haven't even gone into silver shortage, right? Just like when I was talking to TJ in that interview, you know, he's going over all of this stuff. And I was like, you know what, though? You haven't even brought up the shortage either. That's also an entirely different aspect, which is also extremely bullish for silver as well. And that's apart from gold. So yeah, I mean, if you're not investing in the silver, you're silly. And if you need the price to go up for yourself to feel emotionally happy, then you don't understand its true value. Because when it goes down, that's when you should be happy buying all the silver in the world. I'm going to wrap this video up here. If you thought this video was 1, educational, 2, informational, 3, at least entertaining, make sure to hit the like button. I post daily videos every single day. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.